Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include why the Fed is in no rush to do anything, my interview with nCino's Tyler Prows on how automated workflows provide a seamless experience for borrowers and streamlined app intake for LOs in an end-to-end solution, and what's going on with home price appreciation and pending home sales. Today's podcast is brought to you by nCino, makers of the nCino Mortgage Suite for the modern mortgage lender. nCino Mortgage Suite's three core products, nCino Mortgage, nCino Incentive Compensation, and nCino Mortgage Analytics, unite the people, systems, and stages of the mortgage process into a seamless end-to-end solution embedded with data-driven insights and intelligent automation. See how nCino can support a homeownership journey that your borrowers and your team will love at nCino.com. As expected, the Federal Open Market Committee left the federal funds rate unchanged at 4.25 to 4.5% after the conclusion of its July meeting yesterday. This was despite dissent from Governors Waller and Bowman, who both favored a cut, reflecting both political dynamics and genuine policy debate amid tariff-driven stagflation risks. Fed Chair Powell emphasized that rates remain appropriate given ongoing uncertainty, resisting political pressure from President Trump, whose public calls for cuts and threats to remove Powell have raised concerns about Fed independence. While markets anticipate a possible cut by September, the Fed is waiting on clearer signals, particularly from labor data, as mixed economic indicators suggest it's too soon to commit to easing. September rate cut odds now sit around 50-50, down from about 65% earlier this week. Speaking of mixed economic signals, U.S. economic growth rebounded to 3.0% in the second quarter after a first quarter contraction, driven largely by a drop in imports, though overall momentum slowed in the first half of the year due to reduced consumer spending and cautious business investment amid trade policy uncertainty. Growth average is 1.25%, a full point below 2024's pace, and inflation eased slightly, but the effects of tariffs are yet to fully materialize in the backwards-looking data. A key demand measure, final sales to private domestic purchasers, rose just 1.2% in the second quarter, the weakest since 2022, signaling caution as inflation and labor market risks build. And home price appreciation is slowing nationally, with the latest FHFA and S&P indexes showing the weakest annualized gains since early 2023, though regional differences remain stark. Prices are still rising sharply in the Northeast, but declining in states like Colorado, Texas, and Florida. State-level data shows Florida as the only state with a notable drop in average Fannie Mae loan sizes, while Ginnie Mae loan sizes have only declined in Washington, D.C., which is a very small market. Despite recent home price softness in some areas, average agency loan sizes continue to rise overall, and given the persistent shortage of single-family housing, a significant national decline in loan sizes is unlikely in the near term. Separately, pending home sales fell 0.8% in June, according to the latest report from the National Association of Realtors. Regionally, the decline was driven by weaker activity in the Midwest, South, and West, while the Northeast posted a modest gain. On a year-over-year basis, pending home sales were down 2.8%, with declines again concentrated in the Midwest, South, and West, and activity in the Northeast remained unchanged. For today's interview, I want to welcome back to the show nCino's Tyler Prows to talk about how automated workflows provide a seamless experience for borrowers and streamlined app intake for LOs in an end-to-end solution. He's Director of Mortgage Product Management at nCino and has been instrumental in shaping the company's mobile-first, borrower-centric approach.
It seems like a common topic is borrower experience, and it's been advanced so much in recent years, and we're getting to the point where companies are putting a ton of effort into making it as good as they can, because you are getting to the haves and the have-nots, and nCino's obviously an integral player in this. I went to nSites in Charlotte, and I walked around the floor, the exhibition floor there, and I was just looking, I'm going, holy smokes, this is like the future. From your perspective, what's been missing from borrower experience in recent years, and how is nCino, I guess the industry at large, but nCino is obviously so integral and so ubiquitous throughout it. How are y'all working to change that, to advance it, to push it forward?
One of the biggest gaps we've seen is the waiting game that borrowers are forced to play. So they submit a document and then silence. They're wondering, did I upload the right thing? Did they accept it? What happens next? And I think just waiting to hear back from lenders is, especially when you're making the largest financial decision of your life, can be really stressful. So I think one thing that's missing and that's being addressed right now with the industry is borrowers are looking for immediate feedback and confidence that they're on the right track. And that's why we've been investing heavily in various AI and data tools. And we've recently released Mortgage Advisor, and it's an AI chat assistant that gives borrowers instant answers. It helps them answer questions about, say, loan status, required documents, disclosures. They can ask, like, any question about their disclosures, and it can help answer those questions. And it can even jump into any language that the borrower prefers. So if English is their second language and they want to understand what are these documents they're signing in their preferred language, they can get immediate feedback from Mortgage Advisor right there in the app. And that gives them confidence and it gives them immediate feedback. They're not left waiting and wondering. And on top of that, we've rolled out Mortgage Advisor. We're also rolling out document validation, where when borrowers upload documents, we're using AI and OCR to immediately analyze the uploaded documents in real time. And let's say if they uploaded an incorrect document, we'll give that borrower feedback while they're a captive audience, letting them know, hey, looks like there's something wrong with this document. Either pages are missing, it's the wrong document altogether. And rather than wait for that document to go to the lender and into their LOS and to be reviewed hours later, and then, when the borrower has already moved on, they're getting immediate feedback that, hey, it looks like there's a mistake. It looks like you might have uploaded the wrong document or you're missing pages. Let's go ahead and get that corrected so that you can have confidence moving forward. So I think, at the end of the day, it's borrowers need two things. They need more immediate feedback and they need basically trust and confidence and transparency. I think then there's key products we're innovating with to deliver that to borrowers.
Yeah, and it's neat to see borrowers actually enjoying getting a mortgage now. Used to people used to joke it's like going to the dentist and getting a root canal, getting a mortgage. Now you're seeing seamless processes, and obviously, customer retention, customer referral business has been huge. We've seen major players in the space make moves, whether it's with servicers or some of the stuff on the front end with realtors, making moves to ensure that this is top of mind for them and they're giving customers the best experience they can. I I have a monthly show, Mortgages with Millennials, that I do, and we actually had a call earlier that we were talking about how the LO can kind of acts as this layer between the tech and the borrower, and those things need to be configured. Tech needs to be configurable for the LO, but the LO also needs to be flexible with what the borrower wants. Some people want high touch, some people want a streamlined process. It's very diverse what LOs can offer, and I think that there has been tech burnout too. A couple years ago was, oh, this tech, this tech, this tech, and we've seen recently that it's been like, hey, how do I actually get the best ROI on the tech that I can pair back to have? I don't need all the bells and whistles. I just need tech that works for me really well. And so, from a LO perspective, and we have a ton that are listeners to this podcast, what do they actually need from tech right now? And how is that pushing forward product development? Obviously, we talked about, in the first question, how borrower expectations are shaping it a little bit, but when it comes to expectations from originators, how's that helping shape it too?
I think you're absolutely right about burnout. And I think you're right that loan officers don't need more bells and whistles. I think what they need is their time back from administrative tasks, their time back from, working the loan file and instead building relationships and closing loans. I think, one of our original strategies long, long time ago has been to give them a mobile app, something that lets them get out of the office, that lets them, whether on the road with clients or at a soccer game with their kids, still get their job done and still deliver timely and fast, but also, combine the mobile app with, more and more innovation with AI automation is a game changer. And, what we do is we allow them to stay connected and be productive, whether they're in the office or away from the office. And AI and the app can do all the heavy lifting for them behind the scenes. Another cool tool that we're actually about to deliver to loan officers is it's called Refinance Opportunity Analyzer, where basically we're looking at their network of loans that they've worked with in the past and their network of borrowers, and we're always looking for when it makes sense to engage with a borrower. So if rates were to drop even for just a day, we'd be able to surface to the loan officer and say, hey, here are some key contacts in your network that could really benefit from a phone call. And not only that, here's some generative AI scripts that help you understand the value prop that you're trying to deliver to this borrower. So you could call them, you can help build confidence, and you can help them, enter into a new relationship and gain, gain benefits financially by refinancing on their loan. But ultimately, they don't need more bells and whistles. They don't need more things that require them to log in and click buttons. They need things that help them build relationships and drive results. And something else that I firmly believe in, and we've kind of always been that layer between, not always trying to fully automate, but trying to figure out where do we couple full automation and AI with building relationships. And I think where we see the biggest impact of AI is when AI is not just doing everything, but is helping the loan officer know when to engage with the borrower, and helping them know, at the right time in the right place what to say, and that can really help be the difference. So, we've always been a very relationship driven app, and we're going to continue, helping with that. Like, as much as we want to drive automation AI, we want to put that in the loan officer's hand to help them build those relationships with more confidence.
Yes, there's so much going on. What you mentioned, people get distracted with bells and whistles. There's also the current environment that we're in, and so it's nice to hear you kind of cut through some of that noise. But when I look out there, it's, hey, what is borrower demand with housing and affordability in general? What's going on with interest rates? Are we seeing niche products pop up because interest rates are so high? What's going on with the Fed? What's going on with the CFPB? There's so much going on out there right now. How does nCino, and like I complimented you just a second ago, it's nice to hear you kind of say this is where we're going. How do you prioritize what to build next? And which of everything, all that auxiliary stuff I just mentioned, how are those things shaping where you guys are headed and where you devote your power and energy?
Yeah, absolutely. So, we've learned that the best products come from balancing a couple of things. First is listening really closely to our customers' pain points. And also, second, trying to identify where the market is heading. So, it's a fine balance between just being there with them, being a partner, and if you ever look at our roadmap and the things we're delivering, they're always very closely coupled with customers that are identifying pain in their process and helping share that with us so that we can develop the right tools. We also have a regular customer advisory board where we get that feedback directly from customers, and they get the feedback that borrowers want faster, more transparent experiences, and that LOs need tools that give them time back. And at the same time, we see the market moving toward AI and automation as competitive advantages and not just bells and whistles. I think a couple of years ago, as AI was starting to boom, everybody kind of wanted it as a bell and a whistle and kind of be able to say they had it. And now it's starting to be a thing that's actually going to drive, like, who wins and who loses. So I think that's helped shape our roadmap.
The industry loves these catchy phrases, which I'm going to add we hit the floor in 24. Oh, stay alive until 25. Now it's in the mix until 26. And I'm going to say it's going to be heaven in 26. I don't, those sorts of things. But lenders are proving resilient and adaptive. And you could argue that necessity is the mother of all invention. And so it's been neat to see these companies try and evolve both their borrower experience, but also products and programs to meet the modern borrower. And I know nCino's core products, are meant for the modern lender. It's modernizing together in harmony, which is cool to see. Hopefully your marketing folks nod their head as we move from the doldrums of this cycle into hopefully what's better times, and we are seeing the wheat separate from the chaff a little bit. What does a resilient mortgage lender or a very successful mortgage lender look like 3 to 5 years from now? We mentioned all these concepts: affordability, automation, AI. There's a lot swirling, and I think we're getting towards somewhere. What does a resilient lender look like to you?
I think in a few years, they've future-proofed their ability to scale using AI, automation, and operational efficiency. They'll be able to handle the market ups and downs more responsibly because their cost structure isn't tied to manual process. These lenders will have AI handling the majority of routine tasks, so document validation, income calculation, compliance checks, loan file analysis. This means they can maintain service quality whether they're processing 100 loans or 1,000 loans a month without proportionately having to scale their workforce. And here's the key: the human element doesn't become less valuable, it becomes more valuable. Instead, LOs will spend more of their time building relationships, complex problem solving, strategic guidance, because AI will be handling and automation will be handling a lot of that administrative burden. So resilient lenders will be those who use technology to enhance their people, not replace them, but also to remove a lot of those manual processes that when rates go down, if you have a lot of manual processes in place, you're going to have to increase all those manual processes. It's not going to be very efficient, but by future-proofing your ability to scale using AI and automation, you'll be super resilient.
Yeah, and it's been neat to see the conversation shift from is AI going to take my job to how can I maximize my productivity with AI? How can I get away from doing the tedious and mundane and focus more at least as an originator on what the borrower needs, catering to their needs and that sort of thing. And let the back office be the ones doing data entry and that sort of thing, and let AI, get these outputs and let me free me up to do more important things, outreach in the community and stuff like that. Speaking of being out there, the community or on the road, much like me, you're all over the place, and so that you go conference to conference and you visit clients and those sorts of things. What conversations are standing out this year, and where do you expect big ideas to emerge? It's probably a good place to leave the conversation today.
Yeah, I mean, obviously, like we keep hearing about AI, we keep hearing about automation, and we always get questioned about innovation. And a lot of times that innovation is coupled with, affordability and how do we scale and how do we do things more responsibly. And I also want to say that I think the conversations have shifted and they're moving beyond the theoretical like what if discussions to more practical how do we implement conversations. And so lenders are asking the right questions, and they're asking like how do we deploy AI safely, what's the ROI on this automation, and how do we train our teams on these new tools. And it's getting to the point where nobody, they're not just curious about AI anymore, they're ready to implement it, and they're looking for guidance on how to actually gain those advantages. Like I said, it used to be a little bit more like I'm a little bit afraid to implement it. So the bells and whistles actually sound nice because it's cool to be able to say I have it. But now it's becoming that strategic advantage. And so interesting conversations are also happening around customer experience innovation. Everyone's realizing that the lender who can deliver the fastest, most transparent, most confident borrower experience will win. And it's not always about having the lowest rate. Sometimes it's more about removing friction and building trust. I can say that confidently. Like my father, he's done a lot of mortgages in the past, and I can tell you he loves his loan officer more than he loves his rate. Whenever he talks about any experience he's had, he's never referenced that amazing rate he's got. He's always referenced that customer experience that was delivered to him by his loan officer. And I think that's one thing we aim to do is we help loan officers build those types of relationships where borrowers are very loyal to those loan officers. And I think lenders who are investing in these capabilities now, building their data infrastructure, training their teams, and partnering with technology partners who understand mortgage lending, they're the ones who are going to lead the next wave of industry innovation.
You had my heart in my throat there for a second there. I thought you were going to say he loves his loan officer more than he loves his son, but we know that to not be true. But one more point. When I was at nCites and I was walking around and seeing people and just the scale of it, I love how nCino is positioned because you think, these legacy or mortgage lifers, whoever, they have in their head this idea of how a mortgage should be originated. And it hasn't met the demands of modern consumers from a lot of perspectives, speed being just one of them. nCino, with its global reach and its prevalence, excuse me, its presence in other industries, is so apt to come into the mortgage process with fresh ideas and fresh views and kind of come in from the side, much like Tesla did with electric cars, and kind of revolutionize it. So it's neat to see. I've always appreciated the partnership and love seeing how y'all are advancing the modern mortgage. So Tyler, thank you very much for the time today.
Hey, thank you. It's been a pleasure.
Freddie Mac today reported its second quarter 2025 financial results, and Freddie's net worth is pegged at $65 billion after its net income of $2.4 billion, although the net income was down 14% year over year, primarily driven by an increase in the provision for credit losses. Freddie's net revenues were $5.9 billion, a decrease of 1% year over year, primarily driven by lower non-interest income, partially offset by higher net interest income. Today's economic calendar kicked off with U.S.-based employers announcing 62,000 job cuts in July, up 29% from June's 48,000, and up 140% from 26,000 announced in the same month last year, according to Challenger Gray and Christmas. We've also received the June core personal consumption expenditure index up 0.3% as expected and up 2.8% year over year, which is today's feature. Personal income came in higher than expected and spending came in at 0.3% lower than expected. Oh, and we've also received weekly jobless claims in at 218,000, less than expected. Later today brings Chicago PMI for July, Treasury activity that will be headlined by a buyback in 10 to 20-year coupons for up to $2 billion, and Freddie Mac's primary mortgage market survey. After the initial salvo of news, agency MBS prices are slightly better than Wednesday's close, the 2 years yielding 3.93, and the 10 years yielding 4.34 after closing yesterday at 4.38%. Let's wrap up with a joke and some housekeeping. Women will never be equal to men. Well, that's an aggressive start. Until they can walk down the street with a bald head and a beer gut and still think they're sexy. Today's podcast is brought to you by nCino, makers of the nCino Mortgage Suite for the modern mortgage lender. nCino Mortgage Suite's 3 core products, nCino Mortgage, nCino Incentive Compensation, and nCino Mortgage Analytics, unite the people, systems, and stages of the mortgage process into a seamless end-to-end solution embedded with data-driven insights and intelligent automation. See how nCino can support a homeownership journey that your borrowers and your team will love at nCino.com.